going to start with a general question we like to ask in Africa. Can we draw a distinction between Anglophone and Francophone Africa in terms of how investors perceive risk in Africa? And I'm adding to that North Africa as well.
Hi, good afternoon. Thanks for having me. Yes, I think we can draw a clear distinction between Francophone and Anglophone Africa in the sense that Francophone Africa is part of the CFA Franc zone, so that their currency is pegged to the euro. So clearly, you have in the CFA Franc zone much less liquidity risk and non-transfer risk. In other Anglophone issuers, like I would say Ghana or Nigeria, the balance of payment issue is much more a concern, and that's something that is less of an issue in Francophone Africa due to the peg. So now, in relation with your question on North Africa, we cannot really compare, even if there are some similarities, for example, in terms of being oil exporters, or if we speak about politics, since the Arab revolts, a lot of countries in North Africa had massive unemployment, about the youth, and that's something we see also across Sub-Saharan Africa. But overall, Sub-Saharan Africa and Francophone Africa is really different from North Africa on political terms.
Let's focus on Francophone Africa, because those are some of the more prominent African bonds that are out there, from Cote d'Ivoire, from Congo and Brazzaville, from Gabon and also Senegal. How are these bonds performing?
Well, they have been performing quite differently because each of them have there are different problematics. Now, currently, we are experimenting a rise in oil prices, and in that context, the sovereigns will perform differently. Congo and Gabon, of course, being oil exporters, are set to perform better. Senegal, being an oil importer, clearly will be a loser, and Cote d'Ivoire is really driven by its own political situation that remains really uncertain. So, as you know, Cote d'Ivoire has defaulted a few months ago, and as long as the political crisis continues, the default is set to prevail.
How is the situation in Cote d'Ivoire impacting on how investors view some of these bonds? Because effectively, there was the default that you're talking about on the interest payment. The yields have gone up significantly, and there doesn't seem to be a clear solution to the political crisis. Has that had a bearing on some of the other African bonds, particularly Francophone bonds?
Not at all, actually, because investors are clearly differentiating countries. They really know that the Cote d'Ivoire problem is due to very specific national issues, and that Congo, Senegal, and Gabon are really very different. So, yes, they are worried about political risk across Africa, but the Cote d'Ivoire situation has not impacted the other countries.
I mean, on a positive note, Congo, Brazzaville and Gabon are oil producers in Africa, and they should be benefiting from higher oil prices. Has that informed how investors see their bonds?
Yes, both countries will benefit from high oil prices. In the moment, it's not totally reflected in the bond pricing, because there is a general risk aversion, and probably political concerns are overriding the benefits of high oil prices. But once risk perception improves, that should be taken into account into the pricing.
And Victor, finally, all of these Francophone countries, what should authorities do? Because obviously things that influence the bond is the extent to which they're exposed to debt, for instance, how much of a budget deficit they have through public spending, and just generally whether there's a proper plan for fiscal and economic management.
Yeah, I guess the key, and especially for oil exporters, will be to accumulate more saving and use more wisely those savings towards a greater diversification of their economy. That will be very important for their long-term outlook, and also I would say for political stability.